June 13th is by far going to be the biggest day for Tesla stock in many years. And I could be the first to say this, I'm not exactly sure, but June 13th could start Tesla's Nvidia moment. Over the past year or so, I would say, there's been quite a few different opinions thrown out there by different various members in the Tesla community, suggesting that Tesla stock could go through some kind of Nvidia moment. And while that is very true and very possible, there's also a big downside risk to June 13th, as you probably have seen a video or two of mine over the past week or two. I've said this over and over again because I really want to make it clear to everyone. There's a chance Tesla could rally 20% on June 13th and continue on a multi-month or multi-year rally afterwards. Then there's also the chance that Tesla stock could fall 10 to 12% on June 13th and fall under $100 in the next couple of months. So here in this video, I will go over both sides of this. The potential Nvidia moment, reasons why Tesla could go through an Nvidia moment, and trust me, whether you are bullish or bearish, these are things that you probably have not thought about in a while, or at least not in the same light that I am going to discuss them. I think, I guess the easiest way to say this, I think understanding Wall Street is equally as important as, buying a company to begin with. Right? Where things can start to turn and expectations can change. When a stock is priced for, the worst case scenario, there's a lot of potential, upside there. And I think to some degree that's where Tesla is now. But we'll get into that more over the next couple of minutes. But here in this video as well, I do want to share with you guys some of the potential ways that I would hedge my Tesla position heading into June 13th. Now, I currently don't have any hedges on my Tesla position, and it's roughly 45% of my overall, money allocation in markets, right? Throughout many different portfolios. I do own other stocks, but Tesla's by a long shot the largest position I own. And I currently don't have any plans of hedging my Tesla position because I can afford to wait years to, get my money back, right? If Tesla were to be down for 2-3 years, I wouldn't care too much. I would just continue to buy. But if you are someone that may need your money out of Tesla in the next couple of years, or short-term focused, I would say 1 to 5 years time horizon, then hedging might make a little bit more sense for you. I guess let's start off with why June 13th could start some kind of Nvidia moment. And as I just said a minute ago, I think it's very important to understand Wall Street, okay? There's something called a trough, right? As a business is doing well, things start to go bad and you start to get a decline and overall sentiment gets worse. Fundamentals get worse, like EPS and profitability margins, right? You get this declining of the business. Well, what happens when you trough is expectations are basically at the lowest point and they can start to get better, right? Expectations can start to get better instead of being, a really good place and things start to get worse. Wall Street starts to, panic and say, how bad are things going to get, right? You see this with like an end phase or some of your other solar companies, right? Or Dollar General or just different stocks out there where you've kind of started to hit a trough for a lot of stocks, especially interest rate sensitive companies. I think that trough has happened for Tesla. And I think that happened over the last 2 months or so for Tesla. Ever since Tesla's last earnings, it looks clear that as rates start to fall, as long as we avoid a recession, which is like the kryptonite to Tesla's Nvidia moment, then I think there is a real chance that Tesla can be at all-time highs in 2025 and continue to run from there. And I know this is such a complicated subject with so many different possible variations and outcomes here, but that's kind of the way that I look at it. Things are set to get better from here. For an example, EPS in 2025 could come in over $1 per share for each quarter. Wall Street's currently expecting that. Well, what was Q1 EPS of 2024? It was 40 cents, 42 cents, whatever. It was in the 40s, I believe, like 40 cents, 42, 43 cents. I don't have the number off the top of my head right now. If you start to come in with $1.25 EPS for Q1 2025, as Tesla is now focusing more on profitability, that will get baked into estimates, right? Especially as you get closer to, getting into 2025, the estimates will get better and better. And that means the stock is likely to rise. Now, you can also look at things like profitability. Tesla has been able to hold up relatively well their margins throughout all of the different pressures that they have been facing. Now, there's something that is fascinating that happens when you put stress on a business. That business is forced to adapt to survive. Now, if you look at Tesla's earnings, every single quarter, the cost of goods sold, the COGS, basically the amount of money it takes to produce a Tesla and sell a Tesla, has been falling, right? So I've been vocal about this in the past. When rates start to fall and Tesla can start, cutting prices or raising prices because the interest falls, then that's where margins should explode and potentially get back to levels that you have not seen since 2022. You should be at record margins at that time, let alone FSD, right? FSD is going to enter the Chinese market some point this year. FSD as a subscription service has likely grown a lot, even just within the last 3 months, ever since the free trial has been put out. Energy looks like it's, doing wonders for Tesla. That's currently Tesla's highest margin business. So I think from a pure, fundamental standpoint, margins are going to improve. EPS growth rates are going to improve. Deliveries should improve as rates start to fall. Again, as long as there is no big recession. Now, question is, let me ask you, why is Tesla stock $177 stock when it started off 2024 at $260 per share? There could be different reasons for that, but by far, by a long shot, by magnitudes, the biggest reason why Tesla is where it is today is because there is uncertainty that Elon will stay at Tesla. That is because on January 30th, Kathleen McCormick, the judge in which overseen Elon Musk's compensation package or case, I should say, she rejected Elon's comp package. And that has created uncertainties in the stock. And that's why June 13th could be such a big day. It seems like Wall Street is just looking past all of the improvement you've seen in the last 6 months, really like 3-4 months for Tesla. We're just looking past it, right? We know things are going to get better, but Elon is such an important piece of the Tesla puzzle that none of that stuff really matters. And again, when Tesla was a $265 company, we were not at the trough, right? The trough is after the fall, you start to recover. You were still in the declining business fundamental stage where things just look bad and Tesla was going to cut prices forever and, price cuts were never going to stop, right? That's where you were at to start 2024 when Tesla was a $265 stock. So just think about that logically. Things are getting better. EPS is getting better. Profitability will get better as rates start to fall. And as long as we avoid a recession and Elon Musk remains the CEO at Tesla, I think you can start to see some pretty dramatic upside in Tesla stock, especially when EPS estimates start to go higher and Tesla, by the start of 2025, starts to roll out some of their cheaper vehicles. I mean, we're leaving so many things out of this kind of analysis or rundown. There is zero expectation that Robotaxi will deliver anything meaningful. Coming on August 8th, it looks clear that we may actually get a estimated start of Robotaxis. That could get the stock moving in a pretty big way. We're not even talking about the Cybertruck, which has some huge search trend interest on Google that literally turns people's heads. I've gotten 3 or 4 calls now from people that barely know what a Tesla is saying, hey, I seen this truck. I think it's a Cybertruck. This thing's crazy, right? Literally calling me up. And most of them don't know I make videos on Tesla anyways. So there will be some kind of halo effect from the Cybertruck at some point over the next 12 months. And I mean, when you put all of this together, I don't really see a bear case from here unless we go into a recession. Now, you could also say the average Tesla buyer tends to bring in about 30% more income on a household basis than a GM, a Ford buyer, or legacy OEM, right? So maybe Tesla and customers or potential prospective customers would not be the first ones to lose their jobs in a mild recession. You could make that argument, and I've made that argument before, but that's really the biggest, I guess, kryptonite to Tesla going through some kind of Nvidia-like moment. Now, we can also get into the specifics of June 13th. There is a lot of deep in the money puts being bought that has caused market makers to short 100 million shares of Tesla. I don't know. The number's hard to know exactly, but there has been for a week or two now, and there will likely be for another, week or so until June 13th, more and more of those large hedges being put on. And that forces market makers to instantly go out and short Tesla stock. So let's call it 80 to 100 million shares sold short by the market makers. That is directly related or correlated to the decision on June 13th and Elon Musk's comp package. If there's a yes vote, those shares are going to be bought back, right? The stock's going to go higher. Those shares are going to be bought back. If there's a no vote, then they likely just stay short, right? And that is to delta hedge the options that are being bought by large hedge funds and institutions that already own Tesla. And I know market makers, options, delta hedging, it all gets crazy. But basically, if Tesla's stock goes up, if there is a yes vote for Elon's comp package, 80, 100 million shares are going to be bought back pretty instantaneously by the market makers. That's probably going to give you a 10 to 20% rally on June 13th alone. Now, you've also had a lot of retail, a lot of hedge funds and institutions that have really underallocated to Tesla for a while now. That could really start to change things. Again, because you're troughing and things are getting better from here. Things are not expected to get worse at Tesla than where they already are. Now, you also have 105 million shares that are documented sold short from different retail investors, hedge funds, and institutions, not including the market makers' current short position. So there could be 200 million shares that are sold short, over half of which could be covered June 13th and the subsequent following days. That could in and of itself lead to a huge rally. And I do believe after Elon's comp package is reinstated, Tesla's stock may actually start to trade based on good news, right? Or trade higher on good news. This whole time throughout 2024, and specifically after January 30th, we've gotten a lot of good news, and I've reported on it each and every single day, damn near. And Tesla stock has not done much of anything based on that good news. And a lot of that is simply because, I mean, Elon could leave Tesla. Who cares about good news if Elon could leave Tesla, right? Which once those fears are gone, I think good news can be treated as such. So that is the one side of it. And I mean, I think there's probably a 75% chance the vote does go through for Tesla. But unlike earnings, unlike delivery numbers, unlike really any other catalyst we've had for Tesla ever, I would say, this specific catalyst can have some major implications to the downside for Tesla, right? If the vote does not go through, if it does not go right for Elon, which again, I think is only like a 20-25% chance, then you could look at big downside in Tesla. And I think that's why you're seeing so much hedging from hedge funds and institutions. I don't think they're necessarily bearish. I think they have to hedge because of the amount of downside that you can see. And although I don't plan on hedging, it's not a bad idea. It's not. It's actually a really good idea, especially if you need your money that you're invested in Tesla within the next 1 to 5 years. And again, I think, I mean, Tesla could rally well into the 500s, 600s, if not higher, if the markets start to actually realize the AI potential and the revolutionary, development that's happening at Tesla. Put it like this. I think the only other thing that is bigger or better for humanity than self-driving cars, in which Tesla's by far in the lead there, is gene editing technology, right? I've talked about this here on the channel. I'm very bullish on that. I mean, ethically, morally, religiously, I don't know, taking that out of gene editing or what kind of implications that has. That's like the only thing that could be bigger than cars driving themselves, right? At this stage. Obviously, other things in healthcare as well, like curing the C word. I don't even like to say it, nasty word, but curing that could be bigger than, self-driving cars. But there's very few things that add up to that, right? If we just start to get a lick of that priced into Tesla stock, it could be off to the races. But first up, it's making sure that Elon stays at Tesla. Now, I do want to start off by showing you at least one of the portfolios that I have started to acquire more Tesla stock in the last, recent weeks and months. This is one of the portfolios that has a total allocation of about 30% to Tesla. Other portfolios that I bought Tesla in a long time ago have a lot higher allocation because the stocks went up a lot and there's no point in selling the stock and paying over 30% capital gains tax when you could just borrow against it and pay 5%, 6%, 7%, 8%, right? It just doesn't make sense to sell it. This is the new portfolio, and I think that's the one that really matters because who cares who bought Tesla back in 2019, 2018, 2020 for that matter? You're still up a lot. It's easy to be bullish or, excited when there's almost no chance you're going to lose money. This portfolio, on the other hand, is not that, right? This is a new portfolio that is buying Tesla at these prices, which I think that says a lot more about at least how I currently feel about Tesla. And that's why I like to share it and share any moves that I am making. So at least every chance I get, if you guys want to come join the trading community, check that link down below in the description of this video. If I do make trades, which I do plan to, put a couple calls on Tesla before June 13th, then you'll get notified when I do and what moves I'm making. Again, not financial advice. You could lose money in anything you do in financial markets, whether you buy stock, options, crypto, doesn't matter. You can lose money. Even hedging, you can still lose money. But nonetheless, I will share that after this. So market value currently at about $15,300, down about $1,400 or about 8.5%. Average cost $194. I was buying Tesla in this portfolio heavily around the 220s to 200s. And then I bought a lot more when the stock was like 140. Now let's talk about some of the ways that you can actually go out and hedge your position in Tesla if you are a little concerned. Now I know there's different elaborate ways to hedge a long position, but one option covers 100 shares of stock. Now I don't recommend you do anything in options because you will lose money if you do trade options. At certain points you'll do well, at certain points you won't do well. But I wouldn't laugh at you if you were hedging heading into this event. Now I think options are relatively cheap right now to hedge effectively. Like if you were to go out and buy a 180 put, then if the stock fell 3%, you would be hedged. The rest of your position, if you own 100 shares, you'd be hedged. 100 shares of Tesla right now is going to cost you what? $17,000. You're paying $800 for that option. Theoretically, let's say I buy 17,000. I mean, you're giving up like 5%. Right? 5% of your position size to buy a hedge and, protect 20% downside, 30, 40% downside. So if you're buying this put and you're basically sacrificing 5% upside if the stock goes against you, right? Just factoring in the premium you'd pay for the option. I think that makes a lot of sense if the stock could fall more than 5%. And that's why I wouldn't laugh at you if you did have a hedge on your Tesla position, because the options are relatively cheap right now. There's also different things you can do, like sell a call, but that really limits your upside at that point to offset the cost of the put. But unless you're some kind of elaborate fund or have a lot of money in Tesla, I don't think that makes a lot of sense. So there it is. If you want to hedge your position in Tesla, I mean, it doesn't cost that much. You aren't giving up too much upside. I think it could be a 20% upside day on June 13th. And it's only going to cost you 5% or so to go out and hedge something like the 180 put. So let me know what you think about all of this information down below in the comment section. If you guys want to come trade with us live in real time and not the baby over there, say dada. Dada. Thank you for watching. Enjoy the rest of your day. Link down below in the description of this video. I promise there's no babies crying over there. There you go. Dada. Yeah, but that is it. Enjoy your weekends, and I will see you in the next one.